Dear students, we will do module 58. This is indexing part 1. So what is indexing? Indexing is, see for example, in 2010 you purchased a land for 10 lakhs. 2025 you are selling it for 50 lakhs. If you are not indexing, the capital gain is 50 lakhs minus 10 lakhs, it is 40 lakhs. Imagine you have indexed and this price. Indexing is nothing but adjusting the value of the asset with the inflation. So here if after indexing we are getting this value as 30 lakhs, then the capital gain will reduce to 20 lakhs. So this will encourage more assessees to report their income in capital gain. And that is the advantage of inflation. They are adjusting the inflationary trend for the capital asset. So they will, more and more people will be encouraged to disclose their income. So that is the advantage of indexing. So this is part 1. One more part is there that we'll explain in the next module. First I'll give you some equations for calculating, but when I'll do the problems, I will explain that. LTCG for capital asset acquired before 1/4/2001. You know the importance of 2001. 2001 is the base year for indexing. So that cost of inflation index is 100. So in this case, capital actual cost or fair market value as on 1/4/2001, whichever is higher. Say for example, actual cost is 1 lakh, but the value, fair market value as on 2001. If an asset is purchased in 98, the value is 1 lakh. But 2001 value is 2 lakhs. We have to take 2 lakhs, whichever is higher. Compare both the values, whichever is higher we will take, into CII of the year of transfer. Imagine if this year inflation index is 363 divided by CII for 2001, 2000 and 2001, that is 100. So here you have to remember that is the base year, that is the index value is 100. Next is cost of improvement incurred on or after 1/4/2001. So after 2001, whatever is incurred, so capital assets subject to improvement, modernization. So whatever in between few years they will do improvement for the capital asset. So cost of improvement into CII of the year of transfer. See for example, a asset purchased 2023, they modernize for 5 lakhs. So 5 lakhs into, if this is the year of transfer, 363 divided by CII of the year of improvement. So that is the 2023 CII value we have to divide. Next is LTCG of capital assets acquired on or after 1/4/2001. Actual cost into CII of the year of transfer. See here actual cost is 10 lakhs. If this year the transfer happens, 10 lakhs into 363 divided by CII of the year of acquisition. See 2010 index value we have to take. Now cost of improvement incurred after 1/4/2001. Cost of improvement into CII of the year of transfer divided by CII of the year of improvement. So these things we will remember when we will do the problems. You will find that it's easy for computation. Some important points I will tell you. Indexation benefit is available for units of Unit Trust of India. Second, always you have to remember any depreciable asset, capital gain is always short term. It's not long term because every year we are providing depreciation. Now indexation is not there for short term capital asset. When I explain the format, I have explained that. Then indexation benefit is available for long term capital gain on transfer of sovereign gold bonds to all assessees. These are the important points. Two problems we will do. Very simple problems to explain the indexation. So here, compute the index cost of the capital asset. Cost of acquisition in 2002 and 3, 1,20,000. 1,20,000 into year of sale is this year, 2024-25. That meaning 363 is the CII. Now CII for 2002 and 3 is 105. So what is the cost, index cost of capital asset? That value is 1,20,000 into 363 divided by 105. The value is 4,14,857. So this is the simple problem for indexation. Next problem I will explain. 4 assets. First one is jewelry. Year of purchase is 2004 and 5 and cost is 80,000. 2004 and 5 meaning we can take the actual cost. If it's before 2001, we have to take the cost and compare the value with fair market value as on 2001. So 80,000. This year, imagine this year it's sold. So 363 divided by this year index we want. 2004 and 5 index is 113. 113. So the answer is 2,56,991. 2,56,991. See, this is the value. Second is securities. Second value is securities. Securities, you have to remember that there is no indexing for securities. Listed securities. Unlisted securities and mutual funds. Listed securities and mutual funds, units of mutual funds, indexing is not there. Reason is it is taxed, long-term capital gain is taxed is 10%, whereas unlisted securities and immovable properties taxed at long-term capital gain is taxed at 20%. Another reason is that this will encourage more investors to invest in stock market. Third reason is that, see this, in 10%, that is the concessional rate they are getting, then inflationary values are automatically adjusted with the stock market values. Every now and then, you just by the click of the mouse from the net, you can get the stock price. So the values are already adjusted. There is no need for indexing. So second question is about securities. There is no need to index. Third is house property, 2010 and 11, and cost is 4 lakhs. So 4 lakhs into 363. This is the year of transfer. Divided by 2010-11 index is 167. 167. So the value is 8,69,000. 8,69,461. 461. So this is the value. Now the last item. Here you have some adjustment. Plot inherited in 2099 and 2000. So that meaning 2001 value we have to compare because it's before 2001. Now acquired by his father in 98-99. See, he has inherited, he has not paid anything. So what is the cost to the previous owner we have to see. Cost to the previous owner, father has purchased that. He has purchased at a price of 1 lakh in 98-99. Then we have to compare the market value. It is given fair market value is 2 lakhs. 1 lakh or 2 lakhs, whichever is higher we will take. So we will do the calculation with 2 lakhs into 363 divided by this year index is 100. This is the starting year. So the value is 7,26,000. So this is how you calculate. As you calculate more and more, you will learn automatically the equations. It's very simple computation. Only the equations are lengthy. So this is what I wanted to explain in this module. Happy learning. Thank you.